Thanks for watching the Not Your Broker Blueprint, sponsored by Bitget. In this conversation with Pat Felder of Prismatic Capital, we talk about fundamentals that are driving the market as well as the top DeFi projects you need to know about. Please use our referral link in the description below to support our content and to get 20% of your trading fees back. And as always, none of this conversation is financial advice. Please do your own research and make your own trading decisions. Like and subscribe, and we'll see you on the next podcast. All right, welcome to the Not Your Broker Blueprint, sponsored by Bitget. We have in the house Pat from Prismatic Capital, along with my co-host Mike Amson of NYB. Pat, welcome.
Good to see you guys. Yeah,
in the flesh.
Flesh in Toronto. So thanks for coming up to Toronto. I would love just for you to introduce yourself, and we'll dig in.
Yeah, so Patrick Felder, I run Prismatic Capital, based out of California, actually, U.S. Run a multi-strat fund in the crypto space. Launched it originally at the tail end of 2021. Yeah, that's kind of the high-level overview.
Yeah, in 2022, you and I got to know each other through some other projects. Obviously, Mike and I have been friends for a long time. We got connected. So maybe talk about you two kind of interacting and how it's been.
Yeah, thanks for putting us in touch back then. That's a classic like bear market story, I feel like, where you kind of build your network and do a lot of building when things are rough in the markets. And they pay out now when things are good. So, yeah, I got to know Mike during the depths of the bear market and quickly picked up that he's very, very, very good at what he does. Even in the bear market when things are tough, like, you know, you're spot on with everything. So, yeah, pulled him into everything I could to help me out, you know, so he has just given me a lot of advice. A lot of guidance through price levels and charts. I tend to be very like fundamentals focused in how I approach investments. I have a lot of like history investing in early stage startups, early stage protocols. And you know, I'm not a trader by background. So like kind of the intraday pricing movements, whereas to me, they a lot of times seem kind of random. To someone like Mike, you know, he's kind of able to pick up more subtle patterns and fractals. And so I think he's been able to just help me kind of better understand that part of the crypto markets, which is critical. Yeah.
Awesome. Yeah, I can't even remember the exact day that we made the connection. I think Josh had well, I know he had said it.
Pat Felder showed up in Discord.
Yeah,
Said hi.
message, and yeah, I do remember that message. It was the S&P 500 levels where it had followed the exact path. We shorted the top of the market.
Yeah, I remember that.
I think that's how it started, and I think I picked up pretty quickly that Pat's level of knowledge in the crypto space was extremely high.
Yeah,
and I was like, okay, I like to see that. I like to find talent. And I like to get behind it. I mean, that sounds odd, but and help, you know, or see a vision of what that could become. So I kind of, Pat's kind of our racehorse now.
Yeah.
in crypto, I think he's got a unicorn fund, and I think it's going to. I mean, I don't know how much I can say, but I think it'll be a multi-billion-dollar fund.
Yeah.
Within five years.
It's cool just having the talent. Like Mike's right. You know, I've definitely spent a lot of time in the space. You've obviously been in the space for a while, but when you have talent like Mike, a really engaged group in Not Your Broker, and then it's like, hey, all you have to do is just come in and like look at the Discord. I think I screen shared the Discord with you, and I was like, yo, look at this. Now, obviously there's Omega as part of that. But it's pretty cool when you can come in and just kind of like fit in and be like, yeah, this is pretty sick.
Yeah, it's cool. We live in a world, in an industry where, you know, you have all these online communities and there's a lot of garbage out there.
Yeah. Oh yeah.
I love checking out random ones. I think you dropped a link, Josh, somewhere I picked up, or someone did, and I just clicked into it, the Discord link. I was like, all right, I'm going to check this out and see what's going on. yeah, instantly realized all the people in there like knew what they were talking about.
Quite a bit.
Yeah, I mean, everyone's just helping each other out with, their analysis. But the difference is the guys in there really are like vets. Like they have something to show.
Yeah, we got guys in there 40+ years traded in the pit. It's just a different level. Doesn't mean you're always right. It doesn't mean it's always good, but you do have there's an edge in experience. I liked Pat's investment banking background. I like the way he looked at deals. Actually, Pat became one of my guys that go, because I get sent deal flow all the time, like 5 deals a day. And I was like, I don't even know how to vet these properly myself. And I'd be like, hey, Pat, do you mind looking at this? And so I highly appreciate your insight on all of that stuff. It's always good, too. So I'm like, it's nice and that's where networking is so important. But even from a people perspective, I feel like Pat's like one of the nicest guys you'll ever meet, too.
Yeah.
So I think that's some of the stuff that you should talk about on here is go into your background. Pat played drums. Pat, he's got an interesting background into how he got into Prismatic. And I think for listeners and the guys watching, they will want to know that because I found it. I liked it.
Yeah, I have a unique path, I guess, because I kind of hopped around different industries doing different things. I studied finance in school. Like math was always my strongest subject and always what I loved most. So when I got into school, I thought I was going to study math, found my way into finance because it was like an application to math, which I found more interesting.
Yeah.
And graduated during the 08-09 crash. And yeah, worst timing for that class, but somehow I found my way into like an investment banking gig. I feel like I was one of the few kids that landed somewhere whose job offer didn't get revoked. I was pretty just like lucky. So worked in investment banking for a while. Did a lot of like M&A transaction work. I was an analyst on a number of transactions. And kind of just learned the ropes in financial markets and how to analyze companies, how to run numbers, and yeah, just a whole host of kind of analytical skills.
And then how did you go from investment banking into being a traveling professional drummer?
Yeah, the drum thing, I've always drummed. It's always been my main hobby. I still drum now, like every week. But I I ended up playing professionally, like just randomly, more than I wasn't really trying. I didn't really set out to do it.
Sure.
I was just playing with a band on the side, and they started doing pretty well. They had a few songs picking up on the charts, and suddenly it was like, oh, Pat, man, we're going on tour. Like we actually... we're signing a big major label deal. We're going on like a big headline tour. This is like a full-time gig. Are you in? And at the time I was running 2 separate companies. But I was like, early 20s. So I was like, of course, like I'd love to add more onto my plate. Like exactly. But yeah, toured with them for a while. It was a lot of fun. I knew by the end of the tour though, that like, I didn't want to be a full-time musician. That was never like my plan. It's just like a fun thing to do. And
life experience.
Yeah, my calling's always been business, like in startups and investing, and just like understanding financial markets and navigating them. Sure. I always knew that's where I would end up. But
that leads you to Prismatic.
Yeah, I mean, I did the startup thing for like 10 years. I launched a few companies, advised a lot of companies, invested in a handful of companies. And in 2017, started getting into crypto, and started just like laying my roots in crypto. 2017, 2018 and 19 was kind of a brutal bear market where I was a little hands off, but 2020 is when I started getting really involved. For me, that was when DeFi got product market fit. That's when it proved to me that like these protocols suffered a huge, 90% drawdown, and they're still kicking. They're still like working through, the volatility. So that was a very eye-opening experience to me. And that's when I decided I should just go all in to crypto. And I started out with a big focus on DeFi because, like, you know, my background in finance. And I think, I don't know, the cool thing about DeFi is every company, even like the big, larger liquid token projects, you know, like Uniswap or whatever, they're still kind of startups in my opinion. It's still very early stage relative to what you see in like traditional finance.
Yeah, absolutely.
Yeah. And it's kind of like the Wild West. The rules have not been written. The regulations are not there. And so it's kind of fun to get involved in an industry where the people involved now are literally creating the path for the next like 10, 20 years for everyone else to come in behind us. So it's like a very special moment in crypto, in my opinion.
Yeah, I'd agree. Even if you're like applied mathematics, if you're into that type of stuff, creative finance is incredible. And that's, I think, what DeFi is. And I think if you want to have fun in this space, it's whether you create something or invest in it, you, to some aspect, you want to put your own stamp on it. And creative finance is the way to do that. And it's that's why I love the space. I was like, well, this is awesome.
Yeah, it's wild the things protocols are doing. I mean, designing these smart contracts and doing like completely novel things that have never been created. It's like, if you can think it, you can probably program it.
Yeah.
So let's do that and put it out in the market and like see if it sticks.
And it's pretty cool to see Larry Fink, CEO of BlackRock, say tokenization is the future. And it's just such clear signal that this technology isn't going anywhere, and it's actually going to disrupt a lot of kind of the traditional financial stacks from a tech perspective. So
yeah.
Yes. And in reality, it's still so tiny.
Yeah.
Like it really is insignificant currently. So if you look at what, like, as an asset class, how much can it appreciate? Just if you look at global liquidity and you look out at 2027, 2030, and you capture a small percentage, like, I don't think people understand how big that makes this sector.
It's hard to quantify like quadrillions because literally like notional derivatives are in the quadrillions.
Yes.
Like it's hard to wrap your mind around a number that large.
Yeah, it is.
But that is the market.
Yeah, no, it is.
That's TAM. It's like,
yeah,
it's quite large.
So I want to get into, maybe do you want to describe your fund in a little more detail, just how you've, basically what your fund does and, at a high level, kind of how it works.
Yeah. So we originally launched as a long-only DeFi fund, and in 2023 repositioned it as a multi-strat. So it's a multi-strategy fund. For people who don't know, that just means you have multiple strategies kind of operating in silos within the fund, but they also work interconnected. They complement each other so that the overall fund performs better. So we have like 5 or 6 strategies kind of working alongside each other that, when one does well, maybe another one does poorly and vice versa, so that over the long haul, it reduces volatility a bit and it hedges downside, which my investors really like. That's one of the big, I think, unique propositions of what we're doing is we have downside protection, but we're not giving up a lot of the upside. So when we have big explosive crypto moves, like we've seen recently, we're still performing quite well.
Yeah, and just to like throw a little shout out in there, like I won't drop his name on it, but like Pat has the founder of quantitative strategies from Goldman Sachs as part of his multi-strategy fund. And he's the only fund in crypto that has that.
Yeah, I mean, one of my big things is you gotta hire people that are really, really good at their specific domain. So when you're running multiple strategies, like you don't want 1 or 2 people as generalists kind of touching all the strategies. You go deep into like that silo and find the best person. So that's what I've kind of done within each strategy segment. Found the best person I could for them, and make sure that the strategies work together so that it, in sum, makes a fund that's like bigger than the sum of its parts.
Cool. Well, we can get into, so we want to break this into kind of 2 parts. So part 1, we're going to talk deep dive into market overview. So maybe just give the people listening, Pat, what you want them to take away from this segment at a high level.
If you want, I can do I'll do a couple of the stats. And then if you want to do the overview.
Yeah, go for it, Mike.
I'll just drop some of the market stuff. So kind of what we had discussed. So there's 3 stages to a bull run. So you have the early stage, which is the organic up, only fueled with bear liquidations. Second part is moderate, which is market pumps to bring in more exit liquidity. And then you get number 3, which is crowded. And that's the market makes you believe that it's a super cycle and that will never dump. And the moment later, it crashes. And I'll run through. So the smart money process is you take huge risk early, and then you reduce risk as we move to the moderate phase and take profits in the crowded stage. Retail process is take small position early, make profit and gain confidence, add more in the moderate phase, make profit again and get super confident. And then you finally go all in the crowded stage and you get wrecked. And then you hear the crypto is a scam again. So hopefully you guys learn this time. And then I'll go over some S&P 500 stats because it's all correlated. But the S&P 500 is up more than 20% the past 18 weeks. Since the late October lows. Found 11 other times using first signal in a cluster that this has happened. And 3 and 6 months later, it was higher 10 times. 1 year later, higher 10 times and up 18.1% on average, which is another clue that 2024 could be a good one. And it is rare for the S&P 500 to soar in February, and we had 5% gains. So after 5% gains, like we just saw, the next month has been higher 5 out of 6 times. And also the full calendar year up gained a median of 20%. In the next 12 months, up 13% on average as well. So from a data cluster, it's hard to argue that things don't look okay. They look pretty good.
Yeah.
From that perspective.
A lot of that's counterintuitive too, because, I feel like they teach you in school, finance school, like you want to be exiting the market as it's getting better. And
yes.
That sets a framework where you're constantly trying to go risk on, risk off, go in, get out, go in, get off. But it's good to ride the trend, right?
Yep. Yeah, the trend's your friend. That's a real thing.
Yeah.
So that was a good macro, I think, overview, really teeing up that this year is going to be quite exciting. We want to jump into specific crypto data here. So, Pat, how do you kind of look at the data that you see on screen here?
Yeah, so just to frame this a bit, I get, pings from my friends quite a bit, especially in times like now, that are like, where are we in the market? Are we going up? Are we going down? It's especially crypto, it's a very emotional experience for a lot of people when you're investing because it's so volatile. It constantly feels like you're either not allocated enough or you're about to lose all your money in the next 24 hours. And so, yeah, it's tough. So
the emotional roller coaster.
Yeah.
That's what creates the edge.
Yeah. It helps if you look at the numbers and look at some of the data that's kind of in the underlying trends behind them to help. I think of it as like being in a sailboat. It's like you want to go from point A to point B. It helps to know where the winds are, where the currents are, kind of all those things outside of your control.
You want the wind behind your back.
Yeah, so you know how to steer the ship and get where you want to go.
Yeah,
which is making money, hopefully. Yeah. So anyway, with that said, here's some of the data I like to look at. It's not everything. I spend a lot of time looking at data. This is just kind of a subset of a much grander set of charts and stuff that's on my dashboard. But yeah, so to get started, crypto's bottomed out. So I think it's pretty obvious at this point that we bottomed, in 2023. And we could have a double dip. We could go down there again. But at this point, we've had enough of a pickup where we're in a bull market right now. So this first chart, Bitcoin and Ethereum, percentage off all-time high. So you could see it was kind of early, I guess it was early, 2023 was that second bottom. The first bottom was in 2022, and then it kind of picked up right from there.
And that's these two right here that you're referencing.
Yeah. And at this point, Bitcoin, we're recording this on March 5th. Bitcoin just touched all-time highs. Got rejected there. We're down a little bit today, but
as we expected.
Yeah.
Could be making a cup and handle. we're going higher.
Interesting. But yeah, so this chart's a few days old, and so that blue line has now connected back to the 0%.
And that would be this line.
Yeah.
Yeah.
Yeah. So how long we stay up there? Do we run past all-time highs? It's to be seen. I think Mike's probably got some opinions on that. But the second chart is altcoin season. So this is from my proprietary dashboard. This is a chart on breadth, like market breadth, looking at how many tokens are outperforming Bitcoin over 90 days. And I run this across 8,000 tokens over its history. And it kind of indicates to you if we're in, I call it altcoin season. Is this the period where altcoins are going to be outperforming Bitcoin? So you can see we've kind of hit this inflection point over the last 6 months where, once again, it's kind of bottomed. And it feels like Bitcoin's strength is still sucking all the strength out of altcoins. And altcoins are still kind of struggling. But looking at the data, it's slowly picking up. We've turned the corner, in my opinion.
Could this be interpreted as just general liquidity in the market?
I think of it as, where is that liquidity going?
Right.
Is it going to Bitcoin, or is it going to all the other coins?
Right.
Yeah.
And
historically, a lot of that
historically,
dominance comes from the ETF inflows.
yeah.
Mm-hmm.
So I think that's what people need to be paying attention to.
And historically, even going back to like 2015, 2016, there was this kind of inverse relationship between Ethereum and everything else and Bitcoin, where Bitcoin sometimes would be that black hole where Ethereum's selling off because people want their BTC again. So it's had that relationship historically.
Yeah. Yeah. There's kind of a classic rotation people think about, where Bitcoin kind of turns the market around off the lows, starts to lead. Eventually it rotates into some of the majors like Ethereum and Solana. And eventually that trickles down to the altcoins, which just pump like crazy at the tail end of the bull market. That's like the classic narrative, I'd say. It's not perfect, and I think people are questioning it this cycle because of the ETF.
Yeah, and people always do. They go, well, this time's different because of this, and typically it never works out that this time's different.
Yeah.
So there's part of you that remains cautious towards a dip. Am I a believer that prices go higher in time? Yes. Do I have a caution flag currently? Yes. Because of this meme, it's been crazy this past 2 weeks.
Yeah, Pepe looks like a wall.
Yeah.
That it's just climbed a ladder.
Well, I traded Dogecoin. and it's I don't even know how to talk about that.
2 years ago, I never thought I'd see Mike trading Doge, but here we are. We've come a long way.
Yeah, we have. Thanks to Josh.
Yeah. But I mean, it's okay because there's opportunity, I think, in other segments of the market. I mean, this chart shows that long period of consolidation where probably being risk on in other places other than the majors was not super profitable. But now that's changing a little bit.
Yeah. Something I've heard a lot from other participants in the market and other funds I speak with is, I think a lot of people tried to front run this narrative, this rotation I was talking about, and everyone loaded into altcoins just way too early.
Yeah.
And now that they see Bitcoin outperforming most of the market, everyone's feeling FOMO, and wishes they were in Bitcoin. Do we rotate out? Now they're second guessing the narrative, like, oh, are altcoins ever going to get like some wind behind them? Yeah. Or is this just a Bitcoin rally and then it crashes?
But this dynamic has also shown up with Solana and Ethereum recently, where now the Ethereum people and ecosystem was getting FOMO because Solana going into Christmas was like, hitting 125 and it ran up from 25.
Mm-hmm. Yeah. But still far off all-time highs, right? Like Bitcoin.
Yeah, totally. Yeah.
Has gotten back to all-time highs. Solana is still down 50% from all-time highs, which is crazy. It still has a lot to run. Potentially. Maybe not. But yeah, I think, Mike, what do you think about, how do people navigate this, right? Like, these are some of the complex issues of investing in crypto. I mean, my fund, we have a multi-strategy approach. So fortunately, we have exposure to kind of the majors and altcoins at any given time, and we're just kind of like slightly shifting allocations based on where we want. I mean, I know I tell people to kind of play both.
You want to play both.
Don't go all in onto like one or the other.
For me, I'd like to be higher concentration into the majors because you have the ETF inflows. And I don't think people in the space realize how powerful passive inflows are. So we talked about it in the last one, but in 2004, when gold launched their ETFs, that was an 8-year bull run on inflows into gold. So I don't think people are prepared for those type of inflows into Bitcoin. And they actually custody it, correct? So they have to own the Bitcoin. So that drives a ton of buying. So I don't like to necessarily predict price, maybe not on a podcast, but it's hard to imagine a market where Bitcoin doesn't see a significant potential upside.
Yeah.
And I think you want to be highly concentrated to the majors and then slowly work your way down. I think everybody just front ran because you had alt season, you had a bear, you come back and they're like, all those guys, all they remember is alt season or meme season. Mm-hmm. And they're just loading those because that made them, they turned their $100 into 10 grand. Mm-hmm. And for most smaller guys, that's a ton of money.
Yeah, it's life changing.
Yeah. Whereas other guys were going, okay, we see more upside with less volatility in the majors. We know that, for example, what you posted, Fidelity, 1% to 3% allocations, their recommendation to their managers. Well, that makes a difference.
And they're just the first ones.
Yeah.
I mean, more are going to follow.
Yeah, they will.
Recommending allocations.
And you're going to see volatility creep back in, and you're going to see these. I'll just say I'm a believer in buying the dip.
So this here is the gold chart. You said ETF in 2004, which is right this point on
Correct.
the chart. And this triggered a 20-year bull run.
Yeah. So that is what you'd want to use as a focus point for Bitcoin. And then you're going to have the Ethereum ETF. And then I'd be curious for, what are your thoughts on a DeFi ETF?
I think we're far away from that. I think it's inevitable.
Yeah.
I think it's at least probably a few years before that happens. But I think a few things need to happen before we get there.
Yeah. Like Ethereum ETF, Bitcoin.
Yeah.
And highs, and then they're going to want to open up one really quickly if that happens.
And just regulations around DeFi and how, revenue from those protocols flow back to token holders and et cetera, and what staking means in a regulatory environment. But if it's inevitable, in my opinion.
That's why
and then you have passive flows into DeFi.
Yeah.
I mean, yeah.
Yeah, but we've seen significant progress even on that. Like 3IQ in Canada here has an Ethereum ETF, and as of 2 months ago, they figured out a way to pass that staking revenue to the ETF shareholders, which is great in a regulated way. So, I mean, the kind of the initial part of that at least is starting to happen.
Yeah. I mean, in my opinion, it's easy to do. It's just you have to have like the political willpower to do it. The people have to decide like, oh, we want to do this. And then it's really easy to just cut it together.
Yeah.
Can you actually pull up the slide 15?
Yeah.
So this is the ETF flows that we're talking about. These passive kind of institutional flows that are just built into the system that Mike's been highlighting. I mean, we're early. We're only a few weeks into the Bitcoin ETF launch. But even early on, you could see, I mean, close to $8 billion in net cumulative inflows, in the first few weeks.
What's your vibe since launch? Like, do you look at this being more successful than you thought initially or less successful? How do you think about it?
It's on par with what I expected. Yeah, to be honest. I think the thing I'm waiting to see is how flows are impacted in a bad environment. When we have, let's say a month or two of choppy to down Bitcoin price action, where do the flows end up? Are they still coming in? In which case it truly is passive flows that just keep coming in, or do people get spooked and they're really just trading the ETF and they exit?
Can you describe passive flows? Like when you say passive flows, what does that actually mean to someone who's,
Well, it's just money managers.
Yeah. The Fidelity thing is a good example.
Yeah. So they're going, we want you to allocate 1 to 3% of our funds into it. Just passive. They just put it in.
Yeah. So if you have a 401k or something, and money's just coming out of your paycheck into your 401k each month, where does that money go? You kind of set it up as like a 60-40 traditionally, 60% stocks, 40% bonds. Well, now Fidelity's saying, well, actually it should be, maybe 59% stocks, 1% Bitcoin. Yeah.
So the get off zero that you've been talking about. Yeah. So it's not like maybe not even necessarily due diligence. It's, here's our recommendation, 1 to 3%. The money manager allocates 1 to 3% every time something comes in, passive inflows.
Yeah. Which is kind of crazy because I think people look at Bitcoin's price performance and they let talking heads in the media have this thing of like, oh, that's gone up so high, it looks like tulips. But what we're really looking at in some ways is like a technology adoption, right? Because a lot of these funds have never had a way to actually even buy this stuff. Now they do. They see the benefits of having a small allocation there in their overall performance.
Yeah, and whether they like it or don't like Bitcoin is irrelevant. It's the consumer has spoken. They want to not have 0% allocation. So even at 1%, like where you have something that has like finite supply. So where does price go if you have that? Like land, right? Well, there's this much supply globally. So imagine there was only, I don't know, good example, but 10,000 houses in the world. And all of a sudden you now put it out to the entire globe to come buy these houses. Well, value goes up, no?
Yeah, 10,000 crypto punks in my world.
Yeah. Yeah, that one's going to pay off good.
Yeah, cool. Any other thoughts on when you look at these charts and maybe where we are in 12 months from now at the end of this year?
I wish I could say. If I had to guess, I think they continue strong. I think if markets turn, like the stock market, just general risk exposure gets reduced because of, I don't know, for whatever reason, inflation picks up or recession sets in or whatever. Who knows what happens to crypto and Bitcoin? So I don't know. All I can say now is it's a strong start. It's I think it's better than what most expected. It's on par with what I was expecting. So
for some context here, so this GBTC flow here was from the FTX estate selling. They had $1 billion worth of shares that they liquidated. Gemini as part of the Genesis, Genesis as part of the restructuring got court approval also to sell, I believe $1 billion of their own GBTC that they held. So there is still some selling as part of kind of those restructurings of those bankruptcy filings that will have to happen at some point.
Yeah, a lot of this is all blowback from the bear market of 2022, still working through some of that wind down and liquidating. And
I found that fascinating, though, that FTX, this is like one of the first Chapter 11s in history where people are going to be made whole.
Yeah.
That's...
How do regulars not see this? Like, in some ways, it's pretty magical that they can have that recovery rate because the tokens live somewhere. There's a market for it. It's liquid. I mean, how many bankruptcy filings in the past, like Enron, where it blew up and it was just a zero?
I mean, yeah. Not only that, though, but they should have gotten more. Like, that's the crazy thing.
This is
the lawyers,
price at $16K, isn't it?
The lawyers took advantage of the situation.
Totally.
And
as they do.
Yeah, they chose to, instead of giving people back their like Solana token at par for what they originally had, they're going to convert it for cash and give people the cash value at the worst part of the bear market.
Yeah.
And the excess, like, I don't know where that money goes, probably to the lawyers. The lawyers have made well over $100 million on this one liquidation, like this one bankruptcy. It's, yeah.
But it is crazy to see, because I can't imagine being a part of a bankruptcy and getting anything back.
Yeah.
So being made whole, regardless of, oh, well, I could have made something. It's like, well, your company went under.
Yeah, I mean, not everyone is as fortunate. I mean, the Quadriga restructuring, I got 13 cents on the dollar when Ethereum was priced at $300. And that hurt because, I would have loved to have my ETH back, but, is what it is.
Yeah. Oh, boy.
So I want to keep going through some of these monetary liquidity inflecting. How do you look at these two charts?
Yeah. So I've got a whole set of charts related to monetary and central bank liquidity. It's my opinion that liquidity, through that definition, is one of the main drivers of Bitcoin and crypto in general, more so than some of the narratives that have developed, like the halvening cycle. And I mean, the chart on the right illustrates it. If you just take M2 growth, M2 is one of the metrics for monetary supply. Look at the year-over-year change in M2 growth from the top 5 nations, overlay it against Bitcoin price, and the peaks and troughs perfectly line up. So when people start really ramming the Bitcoin halvening, down my throat, telling me that it's like the only thing that matters, I usually point them to this chart to say there are other things going on that kind of drive price beyond some of the more surface level obvious things. The reality is a lot of things are driving price. It's not just one thing or the other. But yeah, I think this chart on the left, that's just another metric for liquidity, bank reserves. So that's the reserves at commercial banks. It's a way of looking at how much kind of, how would I say this, like money is actually in the banking system available to kind of be to underwrite loans throughout the system. And it's another way of just looking at how much financial capacity is in the system, how much juice is in the system. And this, by the way, was a pretty loose relationship before 2008. A lot of this has become relevant since, quantitative easing and quantitative tightening, those kind of market forces. So yeah, this is another one. It shows that once again, things bottomed in 2022, 2023, and it's inflected upward pretty significantly since then. For both metrics over the last few months, we've actually kind of plateaued in terms of liquidity. It's still increasing, but it's increasing at a decreasing rate. And so the change in momentum is what's important for market pricing. And so it kind of calls for some choppiness, in my opinion, whether that's a pullback and then we kind of reset and start going higher from there, or it's just choppy for a little bit. It's not as supportive as just the risk on go like it was 6 months ago, or I guess 4 months ago.
And this is looking at Fed, European Central Bank, People's Bank of China, and the Japanese Central Bank. What kind of mechanically drives these blue bars up and down?
So yeah, the chart on the right, M2 growth, if you took M2 for the US, China, Europe, and Japan, and convert it all to US dollars to do that conversion, and then look at the change year over year. So right now it's positive. I don't know what it is, maybe 1%. And look at that every day. That gives you an idea for how the momentum of liquidity is changing. It's more important to look at the change in momentum as opposed to the amount.
Yeah, because this is in percentages.
Because institutionally, those are things we look at, right? We look at fractals and we look at rate of change.
Mm-hmm.
Versus, so it's the rate of change that's like very important.
Yeah, and these things, it's hard to get actionable insights from these things week to week or even month to month. For me, I tend to like monitor them closely. I check in on them once a week, go through all my liquidity charts, and I'm looking for like really one signal a year, if that, where it looks like we're going through a major inflection, and then that informs like whether I should be more risk on or risk off. But yeah, it's not the type of thing you can trade or get alpha from on a daily or weekly basis.
More directional.
Yeah, it's long-term trends.
Yeah. And that's how you find out, do we have the tail trend behind us? Because that's how you make real risk on decisions. And then the rest can be technical, fundamental information. And when you're long, when you're off, and
Yeah, and in our last podcast, you talked about kind of three important things: technicals, fundamentals.
And number one is always information.
Yeah.
Is the most important. Because people argue about fundamentals, technicals, what's the most important. I wouldn't even waste my time arguing that. You have to have both. Mm-hmm. But number one's information. And that's what we talked about was in crypto, I can get a founder on the phone in 15 minutes, but can I get the Google CEO on the phone? Probably not. So that's why there's a huge edge in the space. There's nothing quite like it. Everything's real time. It's 24/7 markets. Why are you trading traditional markets? I mean, I still do, but it's not that fun. I'm actually like not even enjoying watching sports as much anymore.
I messaged Mike. I was like, so sports are getting a little more dollar because Bitcoin's ripping now.
Yeah, I was like, wow.
It is a sport.
Yeah.
I mean, trading crypto. It's like
at Twitter, you have the hodl, like the Jesus guy.
Evan Almighty, Steve Carell.
Oh,
I love that one.
So good. Bitcoin topping metrics. How are you looking at this data?
Yeah, so these are some on-chain metrics. In the Bitcoin community, there's like 100 of these. There's so many to go through. A lot of them are kind of nonsense. A lot of them are really good. There's probably a dozen I like to check. These are two of my favorite I've seen recently that I think tell something interesting. Because I'm getting the question pretty frequently now is the bull market over? Did we just do this cycle much quicker? At this point, Bitcoin's back to all-time highs. Nothing else. Well, yeah, 99% of other tokens are not anywhere near all-time highs. Maybe that's it. So where are we in the cycle? It's hard to tell, even for me. You have to just look at a lot of different stuff, and they all tell a different story. So these are just two charts that, to me, tell me we're still pretty early in the cycle. I still think you need some support from like just general risk assets to be risk on to support like a good crypto market, the stock market and all, and economy. So the first one I look at is Bitcoin MRV Z-score, which takes the Bitcoin realized market cap, which is, it takes the price at which Bitcoin coins actually transferred at. It's hard to describe. And essentially multiply times like the volume at that point. I guess a way of looking at it is it's like your cost basis sort of. So what people actually bought coins at, so if Bitcoin's at 68,000 now, not everyone's buying at 68,000, right?
Right.
Like everyone has a different cost basis. So realized cap factors in what people actually paid for the coins and calculates the market cap based on that cost basis. So you take that and subtract it from where the current market cap is, which only factors in the current price today of Bitcoin. So the wider that discrepancy is, the wider that difference is, the more kind of, hyped up the market is at that moment. And this translates it into a Z-score, standard deviation, just to know how far it is from its, normal distribution. How far it out is it on the tail.
And it looks like we're half historically.
Yeah, so we're still early on. It obviously inflected, in 2023, started going up, and really at the tail end of 2022. And we're nowhere near like peak of the market.
Yeah. We'll have you back on sometime. Hopefully it's, up here and
we'll all be happy.
Yeah, we'll all be very happy. And hopefully at that point you can kind of, ring the alarm bell maybe.
Yeah, hopefully not. Hopefully it just keeps going, right?
Well,
like the mega cycle.
Never does. Bitcoiners have been talking that forever. Like, this is the cycle where it's just up only, and that's never held.
Yeah, right.
Up only doesn't exist. And when it's time to ring the fire alarm, I'll be there.
Yeah. And you'll be listening to this, so you'll know.
Yeah.
We're not there. I think we're going higher. I would be surprised if Bitcoin doesn't see 101K. I'd be surprised if Solana doesn't see 200. I'd be surprised if Ethereum doesn't see 6,000 to 8,000. And it's crazy when you put those targets out for yourself out into, to other guys that are in crypto, and they look at you and they think you're too bearish. Mm-hmm. I'm like, so that's who you're competing against as well. I don't think those are bearish targets.
Yeah, I mean, today we had a pretty good flush, right? Yeah. March 5th. Mike, you're getting a lot of messages, people freaking out that it's the end, right?
Yeah, I got a message saying we have an FTX flush. I won't call out who did that. But it's just absolutely not the case.
Yeah.
It's $1 billion in liquidations, which usually marks a good spot to buy.
You have to have a pullback like this to get to higher levels. It's part of the process.
Even if we get a slight bounce and we keep pulling back, it doesn't matter. You do have to look out a little further than the next 1 minute if you're trading this stuff.
Yeah, it's a little dramatic. Like March 3rd, we were at this price level.
Correct.
So it's like
I just think that you're not to insult anyone, but you are dealing with a bunch of guys with like goldfish memories that are trading. It is kind of wild to see, but yeah, if you look even a few days back, price hasn't really done anything. It hit the all-time high. You got liquidations, kind of as expected. Now, if it takes time to consolidate, make a bit of a cup and handle pattern, which we had in NYB and Omega, something like that would not surprise me, and that's a pattern I've seen many, many, many times.
I love this chart, by the way. Can you dig into this one?
Yeah, Bitcoin percentage of supply held by long and short-term holders. So this is pretty key to identifying when the market's going to turn. You want to see long-term holders getting out. These are the smart guys, in my opinion. These are the guys that were getting in at the bottom and had the guts to just like allocate when things were ugly and hold, and they know how to play the cycle. And that's the minority of participants in the market. And the short-term holders are the more recent people coming in. So yeah, you can see the yellowish orange line or the short-term holders. The red line is the long-term holders. So in past, turns of the market where things went south, you can see the red line starts dipping, and you have long-term holders exiting the market. They're slowly starting to sell into it, sell harder. And that's kind of what causes, in some ways, the turn of the market.
And almost to these points where these two lines are intersecting.
Yeah, exactly. And you can see where we are now at the end of the chart, 2024, is you actually are getting some long-term holders selling, but it's not aggressive. A little bit of profit taking. I would want to see this thing dip down hard for me to start getting pretty cautious.
Yeah, and to me, this chart just proves the moderate part of the cycle. So people saying, hey, we're really early stages, that's totally incorrect. We're not. You can literally see from here that we're likely going to enter the moderate stage where they come in, they are going to make profit. And that's what helps them build their confidence into the late cycle, and that's where they get hurt.
And last episode, we showed the Google search results around just like Bitcoin in general, and it was nowhere near any hysterical level at all.
Yeah.
To the contrary, it was almost like pinned at the floor still. People have done analysis, how to buy Bitcoin. Yes, it's starting to tick up, but this line spiking up really shows that a lot of short-term minded money is coming into the market, later stage.
Yeah, the hot money.
maybe potentially a fair amount of retail money is starting to get out on TikTok and other social platforms and get a little bit of froth.
What's interesting is I find I'm not getting a ton of messages about Bitcoin, like almost none.
Almost none.
And you're hitting all-time highs. I'm like, that's interesting to me because that's a self-fulfilling prophecy. So are we going to continue higher? How many people sold before we got to this level? How many people will be scared on every dip to get in? And does that cause a lockout rally once again? Like, it just seems to just keep doing the same thing. And until people finally step in, that's when I feel like the big liquidation will come. But is that a year from now? Is that 6 months, 3 months? Who knows? But a lockout rally seems like it just keeps keeping people out. You have guys that sold at 45K, 42, 43, 44, 45, and they're sitting back going, like, how do I get back in? And until those guys start buying, where are they going to buy? 70, 80? Like, how do they get back in? Right now? Because they might be too scared to buy, right?
Yeah, it's tough. I know a lot of people that are looking to get back in the market, sold too early. A lot of people that sold in like Bitcoin at 45 range.
Yeah.
Where you kind of got a big pump off the bottom. Everyone was up a good amount. So, yeah, I still think there's quite a bit of juice to run. I think the key is to have a longer term view. Don't think in terms of days and weeks, but more like months and years and quarters.
Correct.
And all this can turn, like, you know, we should probably caveat this by saying, like, especially running a fund, like, I can change my tune on a dime and suddenly be very bearish on the market and out of it. So I'm constantly looking for things that could cause me to do that. So I think it's good to have like your kind of fundamental root position for the year, but I'm constantly challenging that. And honestly, my position could change like a week from now.
As it should. If you're a trader, you know, your process, your things trade with the wind. So it's information could change. We could walk out this door and something could have happened that changes your opinion or outlook. So yeah, I agree. That's a good caveat to have.
But as it looks now, it's looking pretty
election
good.
year.
Yeah.
Yeah, I mean, at this day of recording, Houthi rebels had cut 4 out of 14 internet cables in the, near Yemen there. And even just that to, the internet caused disruptions across quite a few of the internet companies, which is going to reflect in their share price and overall sentiment. As much as oil going through the Suez Canal is important to global trade, so is the internet.
Yeah.
And I think we've grown up in a economic time where we haven't seen major disruptions to the internet.
Yeah. Yeah, who knows where that goes.
Yeah. I want to get into DeFi here. We have TVL and whatnot.
Yeah, these are some more just like pure fundamentals based charts. For people that don't know, TVL is total value lock. So this is how much money is actually like locked in DeFi smart contracts available for loans or being lent out or used for trading or collateral or hypothecation. It's just money trapped in DeFi, or not trapped, but it's locked in DeFi being used for something. So we're still down 50% from all-time highs. That said, we're up, a couple 100%, or I guess maybe, a little over 100% from the lows. So things are picking up. And this chart, as you can see in the past, like when it picks up, usually it's like exponential. It starts moving very quickly, which is, you have that because prices are rising. So that raises TVL in itself. The dollar value of that goes up, and then that gets more people interested in. So it kind of exponentially grows.
That's what you're saying. That's the reflexive nature of DeFi, which is, I like it.
Yeah.
I love it, to be honest.
Yeah. And it goes the other way too. It becomes a death spiral.
Yeah.
In
Which
a bear
we went
market.
through.
Yeah.
You had that in 22, 23.
Yeah, and this is like the unwinding of Alameda. There's a few major funds that all of a sudden were pulling back their liquidity because they saw risk in a lot of these DeFi products, and just the overall market was starting to kind of unwind and deleverage. But that now is obviously returning as shown here. Crypto fundraising? I think this is important for obviously early stage projects, but thoughts on what you're seeing here, which still looks really early.
Yeah, it's pretty bad in my opinion. It's not a perfect chart because, a lot of projects raise funds and don't announce. So you could see stuff, if people are closing deals now, it might not show up on this chart for 6 months or maybe never. Like a lot of the investments I make in my fund just never get announced publicly, so they wouldn't show up in a chart like this.
Yeah. We also didn't have the AI narrative in 21 in the same way that we do now.
Mm-hmm.
Like, how much do you think that has played into early stage funding in crypto?
Yeah, it's interesting. I think AI as a market segment is definitely pulling money away from VCs. For more generalist VCs that had a mandate that was kind of open and were investing a lot in crypto in 2020, 2021 have probably shifted to AI. But there's still a lot of crypto native funds, and they've been deploying nonstop.
The memes in the internet are popping up. The memes on Twitter that are in my head are the, I pivoted to AI, and then like crypto's ripping, and it's like, pivoting back to crypto.
Yeah. Well, what they should do is AI plus crypto. That is the powerful narrative in my mind, and we'll have projects related to that we'll talk about later.
We are definitely about to talk about that. All right, so we're going to get on to on-chain activity.
Yeah.
How are you looking at these?
Yeah, so these are just 4 charts that show, resilient baseline of activity. So even through the bear market in 2022, a lot of these charts were still picking up. So blockchain daily active addresses, that has just not ever like had a meaningful drop off. It's consistently going up if you look at over a longer time span. NFT transactions obviously took a huge hit, but once again, it's picking up now. Etherscan verified contracts, bottom right corner, always up and to the right. I think the one upper right hand corner is a little bit more concerning. I wanted to throw a chart in here that doesn't paint a rosy picture. This is weekly active crypto devs. And to your previous point, I think this is related to AI. I think a lot of devs have left for more AI related projects. So yeah, there's still it's back to early 2021 levels. So it's not horrible. But I think this is probably related to that previous crypto fundraising chart.
I was going to say
that's what's paying them.
I feel like this indicator lags quite a bit because it's based on, price moves, then investment comes into space, and then hiring. So it's almost like a third order kind of part of it. Having come from the project side, I definitely feel that's true. What's really cool about the top left and how I look at this as someone who's been all the way on the far left side of this chart and seen it go here is the technology adoption. So remove price and investment out of the picture for a second. The technology is finding product market fit. It's people are retaining their wallets. They're experimenting. New users continue to come in despite, kind of crappy market conditions. Can't say much about the NFT transactions and degens. I mean, really previous to 21, this didn't really exist outside of, a handful of things. But, we'll probably see this pick up majorly this run. Again, it's more tied to different products that are being used, different NFT standards. Like last run we had, ERC 721 and, a few other ERC standards come out. But now like the just amazing things you can do with the NFT tech, real world assets, all different types of use cases has not stopped, even though, the bear market happened.
Yeah. One of the things we've been looking at is ordinals.
Oh yeah.
I don't know if we'll get into that here, but that is one that we're pretty excited for. Actually working with an artist right now. I'll give him a shout out, Jonathan Schultz, who's got he's kind of like a world-renowned artist. Bunch of shops. He's the one who had the Nelson Mandela fingerprint. He did it for diamonds. I believe it took him about 18 months, valued at about $40 million currently. I actually just bought a painting from him. It's going to be coming on the way. So
yeah, and how I think about NFTs on Bitcoin. So I was there, NFTs 2017, July 1st, July 2nd, which was literally week 2 of the Punks contract. And, the amount of friction it was to figure out an NFT then was massive. Like you had to understand how smart contracts worked at pre-DeFi. No smart contracts really were being interacted with at the time.
That's when you got the punks?
That's when I got the punks.
While drinking. You figured it out.
While drinking, yeah, as a salesperson, non-technical person. But I look at Bitcoin ordinals the same way. There is a technical lift there. Everyone in crypto is used to Ethereum NFTs, Solana NFTs. The marketplaces are geared towards that. But what I've learned about ordinals is it's, you got to understand some different things that make those NFTs have provenance and whatnot, which are very special. Yeah. So what you'll probably see this run kind of later stages is no one's going to do that homework until prices start moving, and then everyone does the homework. Yeah. And that's where you get that really big flush of money into that category.
And I believe that is coming.
Yeah, that tipping point is starting.
Yeah, no, it's starting.
Sure.
Yeah.
Yeah. And now Magic Eden and a number of these platforms have made it really easy, but yet we haven't seen, in my opinion, that ordinals market get too crazy.
No, it's I think a lot of the stuff is probably geared up into the halving.
Yeah.
Because you're going to have this event, you're going to have the ordinals, you're going to have the showcases, I'm pretty bullish on that in particular.
Layer 2, thoughts here.
Yeah, layer 2, for people that don't know, this pertains specifically to the Ethereum ecosystem, and layer 2s are kind of generally roll-ups that kind of settle on Ethereum, or maybe not, but they kind of all relate to Ethereum in some capacity or another. So layer 2 transaction count, this chart on the left, you've seen it pick up significantly since 2021. The interesting thing is the mix. So Base is Coinbase's L2. And that's a new entrant, a new participant into the system, and kind of just came out with the bang from day one. There's not too much you can do on there, but there's a fair amount of activity, which is interesting. And I mean, Arbitrum's been a favorite of mine for a few years now, since 2022, I guess.
There since day one, Arbitrum right here.
Yeah,
as a builder,
which is one I'm interested in trading.
Yeah.
Not to take off topic, but the unlocks.
Oh yeah,
is kind of a potential drag.
Yeah. There's a huge amount of team unlocks.
Yeah.
Holding ARB tokens, which generally people say that's a pretty bad thing because it's a whole fresh supply of tokens coming into the market. Sometimes people front run it, and then it becomes actually pretty bullish because people overdid it, and then it just rips. You saw that with Solana kind of recently. But
that dead VC chain.
Yeah. But yeah, people are wondering what happens with Arbitrum token price, in the coming months, because that's hitting pretty soon, next spring.
Soon, yeah.
And if you think about it, so Ethereum, these layer 2s are about 100 times less expensive than transacting on Ethereum. So if Ethereum's like $40, doing something on Arbitrum should be in the 10 to $1 range, 10 cents to $1 range. And then Solana is like 1,000th of a penny, which is pretty amazing. But generally that's kind of like the fee tiers for these chains.
Mm-hmm. Yeah. And this chart on the right, I mean, that's the big picture, Ethereum versus the L2s, how much is actually settling directly on Ethereum versus how much is being pushed to L2s. And it's kind of leveled out recently, in the last year or two, which is interesting. My assumption is that it will always be L2s constantly eating away at Ethereum. Yeah. I've been surprised that Ethereum's been a little bit more resilient. There's still stuff happening on chain. I mean, as price pumps for ETH, gas prices go up, so L2s become more attractive.
Yeah, I felt that gas increase recently. Yeah. I was looking actually this morning at selling one of the meme coins I owned, and I saw the gas, and it was almost my entire position.
Oh,
wow. It was like a really small position, but I was like, okay, I guess I'm holding it.
Yeah, I mean, that's the problem. That's like the thing with ETH is there's a lot to be bullish on.
Was that Spectrum?
No.
Okay, good.
No, I'm not selling Spectrum.
Retain.
There's no price.
Retain.
No, you hold that one for life.
You gave me the death stare there.
I was like, yo, don't.
My accountant's going to kill me for that one.
No, not retaining.
I was showing my accountant that holding. And
should we talk about Spectrum? What is Spectrum?
We'll get to Spectrum and the projects. Yeah, so that's exciting. Solana, which arguably could be kind of intertwined in the chart we just saw, but yeah.
Yeah, everyone assumed Solana was dead after FTX. I was one of those people that I was like, it's going to be tough to recover from this for Solana. Yeah. Like I didn't have high hopes at all.
It was one of the ones who was an advocate for that trade for Solana. I was like, I don't know. I think this is going to
$25 over here.
Yeah.
Yeah, and one, I bought it 18. I bought it out. I was buying that whole personals, everything. I loaded it.
Yeah, Mike nailed the Solana trade in starting in August, then September. I think you hammered it.
Yeah.
Yeah, but everyone assumed the FTX liquidation, which owns a huge chunk of the supply of Solana, would just be forced selling into the market and just kind of wreck price. Mike had the opposite stance.
Yeah.
Thought it was overblown. Yeah, you traded that pretty well, didn't you?
Yeah. It's been okay.
Yeah.
And then I just find if you can find those high risk, high reward situations that people have blown off, like, oh, this is what it's going to do. This is just bad. I start to go like, oh, yeah, I'm a little interested now, and I'd like to play that because I think how would I play this? I was trying to maximize returns.
Yeah, and at the time when FTX was happening, the focus was really on the L2s in terms of DeFi. That's where a lot of liquidity was. The amount of new projects and quality products that have come to market on Solana, but have more importantly found product market fit, has increased quite a bit. And I look at Solana as just a really low latency on-chain experience. And so what that means is when you interact on Solana on-chain, it happens really instantly. You don't get the kind of waiting that you do with MetaMask and L2 on Ethereum or Ethereum itself, and Bitcoin too, right? So Solana has gotten really low latency. It happens instantly, which is a good consumer experience.
Yeah. Yeah, it's great for retail, especially with meme coins.
Yeah.
As a fund, like I still do pretty much everything on ETH or L2s, which I think is interesting. I occasionally touch Solana for something, but Solana is still not at the point where they have applications that are ready for, I don't know, like funds. Because I want it to be there. It's a better, quicker environment and a lot cheaper. I haven't seen those applications that pull me in there. It's still just like trading meme coins. But that being said, like first price picked up off the bottom. And then this chart on the right, TVL, because of that, TVL is exploding. So it's pulling more money in. So now I'm seeing a ton of like way more projects fundraising on Solana and launching applications. So like 6 to 12 months from now, I feel like it's going to be a very hot DeFi ecosystem. It kind of lays the path for like where we're going to be a year from now, which I'm pretty excited about.
Yeah, and on the consumer tech part, Code Wallet, which I'm really excited about, they've done a really good job to build on top of Solana, L2 on Solana, to have a really awesome experience with it. And they found a way to take the technology and kind of like the crypto-y stuff away from the user and just, here's an app for you to send money peer-to-peer, but it's using Solana.
Want to send me a couple bucks?
Yeah, I will. I will. But no, I
really
think it's important because
I watched him do that earlier today with someone.
Yeah, really? I will say it's awesome. I love it personally.
Here's why it's important. Like, I've been in this industry for a long time. Everything has been focused on financial applications. But in reality, if we want to get to consumer scale, billions of people, you need to have apps that are not trading. You need to be broader. And we've not had blockchains up until Solana where you could have those experiences and not sit there with a spin wheel because you wanted to buy, like a access to a chat group with crypto. Or, hey, I want to send you USDC and you're turning around saying, well, what do I do with this? Oh, well, you could put it in a DeFi protocol, earn yield, blah, blah, blah. It's like average people don't care about that. Yeah. They want to know, like, hey, what can I do with this? And so we need to get to this part, and I think Solana can do this, where, there's stuff outside of trading and investing. So.
Yeah, you need to think like adoption is everything to this space.
And like Web3 gaming is getting there, but even Web3 gaming is this spectrum of like, gaming on one end and borderline a casino type application on the other.
Gamifying everything.
Yeah.
Yeah. So it's.
Yeah, I have this weird like cognitive dissonance with Ethereum where, I'll go there and transfer a large sum of money from one wallet to another, and it's like $10, and it's, it takes 20 seconds. And I think like, this is so much better than going to the bank and wiring, which I have to do during bank hours, and they're probably going to reject the wire the first time. And then I'm going to have to go in and like show an ID, and it's like this whole thing, which always happens every time.
Yeah, when I was at National Bank, I dreaded doing wires for people.
Yeah.
I used to have to do and I'd be the one wiring stuff out.
It's such a pain.
It's a pain.
But literally the first time I transferred money on Ethereum, I was like, this changes everything. Like, you don't need to do any of that.
I was like, you get to tell me I get to spend the rest of my life inside? I'm in.
Yeah, I tried onboarding this guy in 2016, 2017. I was like, yo, let me send you some Zcash. That didn't not work.
I was like,
still
okay, it's not ready. I'm out.
Is that transaction even gone through? Nope. No. Yeah. So back to Solana, and maybe this is where we start to get into the project part of it. So this is part 2. I think these are really amazing technologies that were announced. Solana calls them token extensions. But I think to maturity of this industry, there's things in here that allow you to, have permission transfers that allow you to have different auditing and privacy features, on-chain KYC, permanent delegated authority where, someone can destroy, let's say, a currency. So if a currency is like stolen, let's say, they can be clawed back. The crypto purist would be like, oh, that's not crypto. But I think it is a needed spot. We can't have these hacks, $600 million gone, and just like there's nothing we can do about it. Mm-hmm. Like we want a bit of both worlds, I think. So, thoughts maybe on the technology evolving to be more feature set friendly for institutions, but also regulators.
Yeah, I can tell you, as a fund who's constantly putting money to work on these smart contracts, is the hack risk is huge. Like every time I do an on-chain transaction, like, interacting with a lending protocol or trading on like a decentralized, futures exchange or whatever, I have to size up the hack risk. And quantify that relative to the risk reward for what I'm doing. And it's like tough to do. I mean, it's a very imperfect calculation where I'm going on gut feel. And to me, like if I can't get over that hump, like traditional institutions running serious money, won't get anywhere close to it. So it honestly keeps me out of a lot of the DeFi ecosystem. Or I have to keep my dollar values like really low because I'm just not going to risk like getting like a sizable hack crushing the fund, and wiping out 10% of my, AUM. It's just not worth it to me. So anyway, where I'm going with this is some of these Solana things coming down the pipeline potentially, and Ethereum actually has some stuff in the works too. Some protocols are building on Ethereum that do a similar type thing where it enables or significantly reduces hack risk.
Yeah, and I mean, transfer hooks here, like you might say, hey, as a fund, we can't interact with DeFi products that don't have this functionality built into it, which is essentially a program that's checking to see, is that transfer permissible or not, right? And so you might have a whole slew of DeFi ecosystem that has this functionality built in so that you as an institution feel more comfortable using a product that, hey, that, hack risk doesn't necessarily exist anymore because it's built in at the chain level and can be enforced. And then there might be the purists that say, well, no, we only want to use DeFi products that, can't be censored and all this kind of stuff, which is fine.
Mm-hmm. Yeah. I think a few years ago, the way I saw this going down was there would be a KYC, like permissioned blockchain, like a very watered down version of DeFi, and that's how this gets accomplished.
Yeah.
But I mean, I don't think it's going that direction anymore.
Well, no, because we want settlement on an open ecosystem. You want liquidity on an open ecosystem because what you're describing is great, but it's not a global market.
It's not permissionless either.
Yeah.
You have to get permission to get in.
Yeah. It's like KYC. The intranet. Like why, do we have multiple internets? Well, we do today. Actually, nation
Yeah.
states mandate multiple internets, but it's not a better internet.
Mm-hmm.
You know, so